Fast forward another 25 years, it's now like $1.2 million to buy. Has this changed? Just the cash removed in a 1% drop in Nvidia could buy you three GDXs. The fundamental physical dynamics are fantastic after what, 800 million ounce supply deficit over the last 4 years?
Okay, so today we have Craig Hemke, and today we will talk about what's happening with the economy right now. We'll talk about commodities, precious metals, gold and silver, and then we will talk about portfolio structure in the current environment. So Craig, thank you very much for being here.
Vladislav, it's a pleasure to make your acquaintance. Thank you for reaching out, and I look forward to visiting with you. I'm always glad to help out.
Thank you very much, Craig. So I would like to begin by talking about the overall economy. So we recently got the economic numbers, the employment revision. So what's your view, Craig, on what's happening with the US economy right now?
Well, I have been expecting the US to slide into recession. This is the third year in a row. So let's kind of frame what I say next based off of that. It didn't seem to kind of look like it was starting to happen for a couple quarters last year, and then that kind of turned around. Um, I write, this is a long answer, I apologize, but I write for my own benefit an annual forecast, usually write it between Christmas and New Year's because that's kind of a quiet time. And I write an annual forecast when I say for my own benefit because I want to know by the end of the year what I was thinking as the year began, so that when I inevitably get a whole bunch of stuff wrong, I can go back and learn from it, right? So this year's, I call it a macro cast, is actually it's pinned right at the top of my Twitter page, so anybody can read it. I called it the inversion reversion. And the reason I called it that is because history, the last 6 or 7 times that the yield curve has inverted, when it then uninverts and you get a positive slope again, that's typically when your recession has begun. Well, we started to uninvert very late in 2024. So I thought, well, this is, unless we're in a whole new, different time of cycle and model, then we're heading into a recession now and you're going to feel it in 2025. So I've kind of thought that way all year. Fought my way through all sorts of what we now know as bogus data. And as we now get in deeper into the summer, it appears that that recession has begun or is already or is just getting started. But it certainly seems like we're there.
Yes, it certainly feels like there's a slowdown. And as you said with the revisions, like the recent data that we got, if that gets revised, we could get negative numbers very easily as well with the employment. So yes, and Craig, the stock market. So the valuations look very high if we look historically. Um, so what's your take on that? Would you expect, I suppose, slow normalization of these valuations or a rapid decline crash style?
Um, well, I'm going to give you another long answer, Vladislav. When I first got out of college and as a working stiff 35 years ago, I was a stockbroker. And back in the 90s, if you could double, I mean, the rule of 72, right? If you could make 9% a year over 8 years, that's 9 times 8, that's 72, you double your money, right? If you make 14% a year over 5 years. And that used to be, that was a great rule of, oh, we double our money. Now, if you don't double your money like in 6 weeks, you're a dope, right? So when it comes to valuations, this is all something that I'm just an old person. That's a hard thing for me to get my arms around. But I've thought the market was going to roll over on multiple occasions, and it hasn't. I know there are a lot of people I respect that are really smart that think we're in kind of a rolling double top in the S&P. And maybe we are. Maybe we're going to enter into a pullback. But I also think, Vladislav, that we are in that kind of crack up boom phase of the erosion of the currency and the debt-based monetary system. And in that case, things just keep going up because so much cash has to be printed to service the debt that it can't help but kind of get out into the regular markets and just look for a home. So every time I thought we were going to roll over, magically the stock market has bounced back. And I suspect that rather than some protracted 50% decline, um, any sell-offs will continue to be relatively shallow.
And Craig, you mentioned the currency. So we talk about the US dollar. It has been weak recently, even compared to the other currencies. But what's your take overall on the dollar and its future for the next 5, 10 years?
That's always the challenge, right? Because it's almost as if the dollar index was created for the sole purpose of creating this mirage of stability, right? There's a period when the dollar looks weak versus the other currencies that are in the basket. That's primarily the euro, but also the pound, and the yen, and you can go down the list. And so the dollar index goes down, and then there's a period where the dollar's stronger versus all those others, and the dollar goes up. And you can pull up a monthly chart of the dollar index and see that it's basically the same point it was 30 years ago or 20 years ago. Pick your time frame. I mean, it's around 100, and that's kind of like the place it seems to oscillate around. So, is the dollar stable? Well, relative to these other, trashy fiats, but is it really stable? So I like to put it in gold terms, as you might imagine, as a precious metals person. I've got here, I always like to do this, Vladyslav. I haven't done this with you yet. Um, this little gold bar. Now, this is not a gold bar, okay, right? It's got a hole in it. It's a piggy bank, right? But that's gold in its most recognizable international form, that allegedly the 400-ounce bar, okay? Um, you could go back to 1971 when Nixon suspended, the gold backing of the dollar, and it took about $14,000 to buy a bar like this. Fast forward 25 years, it takes about $110,000 to buy a bar like this. Fast forward another 25 years, it's now like $1.2 million to buy. Has this changed, Vladislav?
Oh,
No.
not at all.
I mean, it's the same. I mean, the gold remains the same. So from my perspective, that's the best measurement. Even in the last couple of years, you used to be able to buy that for $2,000. Now it takes 3,400. So the dollar continues to weaken, not so much against the other fiat. That's the deception. Continues to weaken in what it can purchase. Gold is the standard by that. So that's one part of the answer. The second part is, though, and it's very important, though, to track the dollar index, because with 80 to 90% of trading volume every day being driven by high frequency trading computers, algorithmic program computers, they make buy or sell decisions a lot of times based upon whether the dollar index is going up or down at any certain moment. And you can see it anytime news breaks, during a Fed press conference or after some data point, dollar spikes and gold plunges, or dollar plunges and gold spikes. Um, so you need to know that general trend of the dollar, because it'll either provide a headwind or a tailwind for the precious metals if you're trading. But over time, there's really no other way to keep the system going than by continuing to print dollars to service the debt that devalues and cheapens the existing dollars, and gold just keeps going higher.
And Craig, so staying on the topic of gold, so if we look at the macro situation, of course, the fiat, the structure of the monetary system, if you look at deglobalization that's happening right now, things look very good for precious metals. But some might say that gold performed quite well already. So what would your outlook be for the short term for gold and silver and precious metals, and for the long term? How bullish would you be on those three commodities?
Well, we've had a kind of an anomaly over the last couple of years. Gold has averaged a gain of about 9.5, 10% since the year 2000. There have been a handful of years where the gain was over 25%. I think 2024 was the third year. So we entered this year, and I wrote that in this macrocast. It's like, okay, we should probably, I think we should be happy going back to a 10% year, right? Now that's what history would suggest. It's about how quickly the dollar's been devalued over time. And so you think, okay, that would make sense. And here we're, boom, just blast out of the gate as the dollar index is falling for the first 6 months of the year. And now we're up 25% again already. I mean, we were going sideways for the last 3 months. And frankly, I mean, Vladislav, we could go sideways the rest of the year and sit back and go, yes, what a great year, right? We get anything back now, and people are just despondent, and depressed, and every time gold goes down 50 or $100. So we anyway, to answer your question, we've been going sideways for about 100 days. Price appears to be pressing up against a very well-defined resistance level. On the front month December futures, it's about 3,500 or so. It's been up there 5 times now and has been immediately reversed the next day. So if it can get through there, and we're in a very strong seasonal period. August and September, typically very good periods for gold. We're in a time now where Powell's Jackson Hole speech later this month and the September FOMC ought to be pretty dovish, given the recent data. I think chances are high it could break out. And if it does, I mean, we're open field running again. Um, I think personally, I think dips should be bought. Outside of a complete deflationary collapse where all markets are plunging and gold futures are being liquidated just because they have a bid. It's hard to see where we're going back under 3,000 or 2,800 or something like that. And boy, if we do, people better be excited and happy and buying it up rather than being angry. And one last thing, that the consistent central bank demand is also what underpins this. And that, even though it's slowed a little bit this year, certainly doesn't seem like it's reversing.
Mm. Thanks for that, Craig. And so if we look historically, there's nothing abnormal about gold going up 500, 600, 700%. So that's interesting. But even at the current levels, Craig, the companies, the miners that produce the commodity, they're doing really well. We've seen the miners showing their financial reports, like companies like Newmont, they're printing cash at the current levels. So even if the price of the commodity stays, I believe there is a big opportunity in the miners. What's your thought on that?
Yeah, there's really still a kind of disbelief, I think, from the general investor that gold price is where it is. I think they misunderstand why it is where it is, and they think, well, it has to go back down. And so what happens is you get 2 weeks ago, great earnings, as you mentioned, for Newmont and Agnico and a slew of others. And then the stocks go down on the earnings. You're like, well, what's going on here? And I think that's pretty clear. I think that the people that were trading something like Agnico Eagle saw those great earnings, saw the price pop up, and then they sit back and they go, well, what else could this company do for the next 90 days? I mean, why would I want to hold this now? I got a profit. I might as well sell it. And then maybe we'll look at it again, sometime in October, or September before third quarter earnings, because maybe the gold price will go down during the third quarter. And in the dollar, late in July, the dollar was rallying and everybody, we just had an FOMC where Powell's super hawkish. And so you saw that right up until the 1st of August that the miners reported these great numbers, then they were going down. Well, then what happened? The jobs report was finally understood to be a joke. And, oh, wait a second. They're going to be cutting a lot this fall because these jobs are terrible and the recession that we talked about and everything else. And so last week, it was as if all the people that had sold or waited to buy and they thought, let's see see if gold can hang in there in the third quarter. All of a sudden went, whoa, gold is going to hang in there in the third quarter. In fact, it might even go higher. And so we better get into these shares. And the GDX was up 11%. The SIL was up 15%. Everybody kind of rushed in at once. And so as the gold price, I guess I'm giving you a long answer, Vladislav. It must be the coffee. As the gold price maintains, okay, it just stays at these levels. As you said, the miners that are controlling their costs and keeping their margins wide are going to continue to do well. What we need is just a recognition. We need general investors. We need people to be focused maybe more on value, than the growth of the Mag 7. And that'll open more flow of funds into our sector. But for now, yeah, you're right. They look great. And the smart companies, the ones with excellent management, are doing the best.
Yes, I don't hear anyone around me talking about gold, silver, never mind the
Right.
miners. So that's a very good sign. And Craig, just on the miners, would there be a certain stage on the Lassonde curve that you would be more interested in right now? So maybe the developers, the juniors, because like if you look historically, usually money flow like sort of trickles down from the commodity to the big guys, then to the smaller guys. Do you pay attention to that, or do you purely analyze individual companies?
Oh, for sure. You are absolutely right. Historically, that's how it's worked. And if we're going to use that as a basis, and I think you can, I think it makes the argument that we're nowhere near the end of it, right? Because so many exploration companies that, geez, I thought you go back, 2 years ago, and some of the exploration companies that I own and still own, if you'd have said, hey, Craig, don't worry about it, man. By summer of 2025, we're going to be talking $3,400 gold. I'd have thought, oh my gosh, these little exploration, and they're not, I mean, they're doing okay, right? Um, but I mean, no one could make a case that that's really, the Toronto Venture Exchange is not, going gangbusters with new highs and new trading volumes and stuff like that. So yeah, I think we're just barely getting started. One of the things I like to point out, there was a day, what's Nvidia, like $4 trillion or something like that, right? And so, if it goes down 1% in a day, what's that? $40 billion of market cap. Is that right? Yeah, right? I'm doing the math right. Okay. The entire market cap of the GLD ETF, I'm sorry, the GDX ETF, the entire market cap is about 16 billion. So just the cash removed in a 1% drop in Nvidia could buy you three GDXs. Or look at it this way: the entire market cap of what is it, the Philadelphia Index or whatever it is people like to use is like $520 billion. I mean, it's nothing, and there's so much cash that if we just get globally, I mean, trillions, literally, we get any of that money start to flow into the precious metals. There's just not that many places for it to go. So, um, I've always worked under the theory, the thesis that a time is coming when our sector is going to be noticed and invested in again. But boy, like you said, based off of that historical, model of how things go, I don't think we're anywhere near that point yet.
Yeah, it's a great perspective compared to Nvidia. Yeah, it's great, really, if you think about it.
The
Uh,
amount of money is just, it's mind blowing how much money is in those stocks. And not just in, put them all together. I don't know, Vladislav, what's it, $20 trillion maybe, or whatever it is. Maybe not that much, 15 trillion just in that handful of stocks. You get any rotation out of those. I mean, a microscopic couple of basis points of rotation out of those and into our sector. And you're going to see some stuff that we've been waiting to see.
for sure. And so, Greg, I would assume you're not interested in the bond market, right?
Well, I don't own any fixed income. My own portfolio, which I share with everybody at TF Metals, so they can see maybe which ones they should avoid. Um, my portfolios are rather um, wild, speculative, right? I'm not looking to diversify, but we do have to pay close attention to the bond market for a number of reasons. One, like the dollar index, moves in the bond market on a daily basis are an input for these high frequency trading computers that buy and sell gold futures in particular. Bond market moves don't really impact the silver market on a daily basis unless it's indirect where bonds are selling off, rates are going up, and so somebody starts buying the dollar index goes up, and then silver goes down. So it's kind of indirect, but you can often see higher rates alone on a flat dollar day impacting gold negatively. So we got to watch the bond market just in that case. However, I think in a big picture, I think we're being if you're willing to connect the dots and for people, willing to look past, next Friday, I think you're being told what's coming. I mean, Trump has made it very clear that if he could fire Powell today, he would, right? Um, and that's what this whole thing about, the $3 billion they're spending on the Fed's Eccles building headquarters. That's what that's all about because they're trying to build a case to fire him for cause, for fraud and all this other stuff. So they're doing it. If he could, he would. Either way, Powell's gone in May. We know that for certain. We also know for certain that Trump wants to put in there somebody that's going to be very dovish and do what he wants to do. We also know for certain that the Secretary of the Treasury has discussed about completely remaking the Fed into kind of this combination Fed Treasury thing that works like this. They're telling you that's how they're going to try to manage the debt and the bonds and the notes and the bills that are constantly being issued and then refunded and reissued and everything else. To me, that's code word for yield curve control because their concern is that kind of like when Powell cut rates last fall, that yeah, the short end went down, but the long end went higher in rates because they're like, oh, it is inflationary. And their concern is that, Trump puts in somebody that cuts Fed funds to 2%, and then, the long bond goes to 6. The 10-year note goes to 5. And so what I'm quite confident of, this melding of the Treasury and Fed together, is they will then have a backup plan that is as simple as, hey, the Treasury will be the buyers of everything over pick your level, 4%, 3%, whatever. And anytime, kind of like the London gold pool back in the day, anytime rates go over 4% in the 10-year, we're going to be in there just buying it like crazy to push it back down. Um, that's what I think they're telling you is coming, and that is extraordinarily bullish for the precious metals.
That makes sense for sure. And Craig, just going back to silver.
Mhm.
So we know that silver, um, I suppose it gets influenced more by the economy. And also, if we talk about the bull markets, it usually performs better near the end stages of the bull market. So what would your allocation be between gold and silver right now?
Trying to think of what I currently am. Um, I've been buying physical metal since, I don't know, 2009. I kept buying silver. I mean, I've got some silver I bought 7, 8, 9 years ago, like at 13 and 14 and 15. So my cost base is pretty low. But I haven't sold any of it. I think I'm about 60, I don't know, just about 60% gold, 40% silver. I've always been more of a protect your wealth with gold than speculate with silver. It's true though that silver usually moves, later than gold and usually moves on maybe a 2x percentage of gold. The fundamental physical dynamics are fantastic after what, 800 million ounce supply deficit over the last 4 years, right? Um, the scheme of how it's priced globally with derivatives that rely on leverage and is the metal, how much metal actually backs all of these forward and futures contracts around the world. We're seeing really interesting developments in other markets like that, like platinum, that could very easily ripple over and impact silver. Copper, it's kind of tied to copper in a way. Um, Copper's had obviously its own party for the last 5 weeks. Um, but anyway, I'm excited to see what will happen with silver. I don't want to make it sound like next year, but I'm really more interested in silver as a 2026 play. I mean, silver's already up a significant amount this year, and it can still catch fire and generate its own momentum to the upside, which is typically what it does. It'll sit there and do nothing. And people are like, well, I don't want any of that. It does nothing. And then it starts to break out, and people think they get FOMO, and then they go, I got to get into this. And then, the thing kind of becomes like a virtuous cycle, kind of builds on itself. It generates momentum, the price goes up, which generates more momentum, and the price goes up further. That kind of started to happen back in the springtime when we went from 27 to 33 to 39. But I think the day is coming. I think it's more like a next year phenomenon. If I'm right about what Trump has planned for 2026, um, then silver's going to go back to its old all-time highs, and people are going to be like, whoa, it's going to, roll over for sure. And then when it gets above its old all-time highs, and starts trading with a five handle, people are going to be like, oh boy, and then you get this rush. And so, um, again, I'm positioned. I own a lot of physical silver. I've never sold a single ounce. I don't go to like the coin shop and take a couple of tubes of Eagles, and because then what do? You turn it back into cash. Well, who wants that? Um, but I do think silver's got a lot of catching up to do, and it's going to continue to do it.
100%. The fundamentals look really good, but also that huge cup and handle from 1980 looks fantastic. And as you said, if we break that all-time high of 50, I mean, we could really, just from the technicals, go to 200, 250 easily.
Right.
So it looks very, very interesting. So thanks for that, Craig. And so just a question, I like to ask this question on my channel, Craig, for the younger audience. So if we have an individual who's still, I suppose, at the start of their wealth building path,
Mhm.
and they have so many choices. They have the Bitcoins, the Nvidias, the things that we're talking about right now. So what's your advice be to that person about what they should pay attention to and how they could start this wealth building path?
And I've got a couple of young people in my life. My daughters are 25 and 27. And the goal for any investor, really, but particularly a younger investor, is you've got to have positive inflation adjusted returns. You can't just bury it in the backyard. I saw a tweet over the weekend. I think it was a picture of the safe of this guy, Drake. You know, Drake?
Yes, yes, I've seen that also. Yeah.
And a picture of all his cash. And I'm like, dude, I mean, that cash is losing 5%, 10% of its purchasing power every year. What good you can't, that's just not going to work. You've got to understanding that your dollars are being devalued. Understand that when you have savings as a young person, you work. Nobody like you always see these things about, they don't want to work and all this stuff, but they do. And they work and you pay your rent and your car payment and you go have fun with your friends and whatever you have left over is what you can save, right? Well, that's your savings. That's the accumulation of your hard work. When your government, your Federal Reserve, your central bank, combine to print more and more dollars, they are stealing from your hard work. Okay, you've worked to save this cat, Drake, with his vault, right? His safe. There, as more dollars are being created, it is lessening the value of all of those dollars that you've managed to work so hard to save. They're stealing that value from you. So it is vital that you at least have some of your investments that are not dollar based. The stock market, you get the right mix of assets, at least maybe you can beat that inflation bogey. But to me, again, you've got to have some of your investments in Bitcoin, in I don't know what other cryptocurrency you might, be fond of, but gold and silver as well. I always like to point out when we talk about the central bank buying, what are these global central banks doing? They have an accumulation of dollars through their own hard work, global trade, and they get up with all this pot of dollars. They're taking some of their dollar savings and they're buying gold, okay, to diversify out of dollars. Well, if the central banks are doing that, why wouldn't the individual take some of their dollar savings and do the same thing? And you should never put everything into one thing. That's foolish, for sure. But in terms of diversifying, that's what you need to do. And then again, that's what I tell my kids. That's what I would tell anybody. Make sure you're not just sitting in a CD. I mean, at least if anything, these days you can get 4% in a CD, but back in the day you were getting a 25 basis points. Um, anyway, make sure you're keeping up with inflation because that's the only way you're eventually going to get ahead.
Yeah, I fully agree. And if we look at historical examples of hyperinflation with the Weimar Germany, with the Venezuela,
Mm,
and all these examples, it happens, and it happened in developed countries as well. So it's
right.
diversification is very important in that case. And Craig, what would be the best advice that you received that helped you in your investing career when you were younger and maybe less experienced?
Well, that's an interesting question. I haven't been asked that in a while, so I have to think about that one, Vladislav. When I was just getting started out, again, I was 24, 25 years old. I mean, 35 years ago. Um, when I first got started as a stockbroker, and working in the securities industry and that kind of stuff. And I guess, if anything, I learned from an older guy in the office that you have to think for yourself. Um, you just, it is now in the internet age, probably as important and more important than ever. Um, yeah, your company, your friends, other people in the office, whatever, they're always going to have their opinion, right? And you'd be wise. I mean, that's what they used to teach you at university, right? Critical thinking. You'd be wise to hear what people say. I'll do that. And then come up with your own conclusions. And so I had a guy, again, long since passed away, but he had reams of data on his desk. I mean, you could barely even see him. You go walk into his office, you'd see like his eyes above all these paperwork. But he was doing all of his own research, and he and his clients greatly benefited from that. Not just the spoon-fed. This is what the CNBC said to buy, or what his firm said to buy. Think for yourself, and don't be afraid to act on those convictions. And that makes me think of one more thing. So now that I've had a chance to ramble and think at the same time, um, one of the greatest thrills I've had in running this website for the last 15 years is the incredibly brilliant people that I've been allowed to meet that I would never meet, right? I mean, I know billionaires, and I mean, I'm just as dope out here in the middle of nowhere. Why? How would I know? It's just astonishing to me. But one thing Eric Sprott told me once, um, he said, you've got to have the courage to be at a party, but yet be off in a room by yourself. And it takes a lot of self-esteem and courage of your convictions to stand steadfast with your own beliefs and not just go with the crowd. And he said, Eric was a stockbroker too. And he saw what was happening in the late 90s and into the early 2000s and planted his flag and said, and he was a very unpopular opinion back then. Remember Gordon Brown selling all UK gold at 250 or whatever. He said, but I knew I was right. So I started my own party and waited everybody to come to me. And anyway, that goes along with what old Lloyd had told me at Payne Weber back in the day. Those two things: have the courage of your convictions, and then stand your ground.
These are very good advice. So thank you very much for that, Craig. And just before we finish up, Craig, is there any other commodities that you would be interested in, maybe like uranium, copper, right now, or do you believe that gold and silver have the most upside?
Well, that's always been my focus, is gold and silver. But there's nothing wrong with some diversification. I own a handful of shares in what is it, the Sprott Physical Uranium Miners, whatever, URNM. And I've been a proponent of the uranium story. I think I was talking to Rick Rule once, another one of these billionaires I somehow know, 3-4 years ago. And he was talking about the long-term fundamentals of uranium. And I remember talking to him about the whole deal. You could maybe double your money over 5 years, with an exposure. And that used to be great. And I mean, some of the uranium stocks, have done great. So I like that story. I'm not overly aggressive with it, but I've got some there. The copper story, from a physical supply demand dynamic, is compelling, but you could say that about a lot of hard assets. I got a lot of people on my site that are suddenly really excited about platinum and palladium. Um, okay, yeah, no, they're priced the same way as gold and silver, and so they're running into some flow issues in London, and that's interesting. And I'll give you one more too that I'm intrigued by. I just talked on my site I did an interview last week with a guy who runs a tungsten company. And President Trump has put out this thing, said we got to do better in the US with all these critical minerals because China controls so many of them, critical minerals and rare earths. And if they cut us off at the knees because we're suddenly, you know, overt adversaries, well, then what are we going to do? The US doesn't mine any tungsten. That's just picking one. China mines 85% of the world's supply, and they don't let a whole lot out. So what are you going to do without it if you don't have any your own domestic supply? I saw a chart had like last week's like 20 different critical metals and how much just in the US, but like only US only produces like four of them. So there's again, that takes a lot of work. You can't just, randomly buy one. I don't think there's a lot of critical metal mining company ETFs that you can buy. Um, but I think that's kind of an interesting sector as well. So yeah, gold and silver with then some of these other things sprinkled in. We talk about a lot that on my site that people at the site in the community are always kind of sharing ideas in that regard too. And it can be fun. Come in on a Tuesday morning and all of a sudden, all your gold miners are down, but you got one of the, UEC, uranium energy is up, 10%. You're like, oh, all of a sudden your day is a little brighter.
Yes, no, the whole commodity sector looks fantastic for the next decade. I think
Hmm.
there's huge opportunities in a variety of different commodities. So, Greg, these are all the questions I had. Is there anything else that maybe we haven't mentioned that you believe is important?
Well, the big picture, we kind of touched upon that. Um, to the person that doesn't pay a lot of attention to gold and silver, but they're seeing it in the headlines and gold's 3,000, whatever, and they think, well, it has to go back to, maybe it will. I mean, but the trend, like I said, there's a reason why gold went from 1,100 to 2,200 to 3,300 over the last 10 years. Okay. There's a reason for that, this constant dollar devaluation. So please, I tell my friends, don't get caught up in that price. Just understand why it takes now $3,300 to buy that same ounce of gold. Um, so big picture, that's the kind of thing that I urge people to always remember. Short term, let's keep an eye on things. Like I mentioned, this is August, September, and October are seasonally about the best time of the year, right there with late December and January. Um, Price breaks out during this strong seasonal period, new all-time highs. It could really pop and add on a couple $100 pretty quick. So watch out for that. Powell's going to be pretty dovish probably at his Jackson Hole appearance in a couple of weeks. The next FOMC meeting in September is certainly going to bring at least one 25 basis point rate cut, if not more. Um, Maybe, who knows? Maybe it says buy the rumor, sell the news thing for gold. I don't know. But short term, there's a lot of things that could still drive price higher. Long term, um, just make sure you own some as your protection against the madness.
Hmm. So, Greg, I really enjoyed this conversation. Thank you very much for being here, and I hope to have you back, sir.
Vladislav, it was a pleasure. Call anytime. Always happy to help out.